What's going on, everyone? My name is Jeff, and this is the 3 stocks to short for May 2019 video. Guys, last month we had a really good level of success. Some of the put options I played, guys, got in the money. Now, we are in the middle of earnings season, and so usually what I like to do is be covered on any positions I have going short in a company just in case a short squeeze happens. Because keep in mind, bad companies and companies that are moving in the wrong direction often report good earnings on quarter after quarter of guidance being lowered, and sometimes the stars align. So many people are holding these stocks short, they get a short squeeze and the stock price runs up. And see, that's really the technique that I want you all to learn and to start trying to incorporate into your short sales and your put options, okay? Multiple quarters of bad earnings and getting lowered guidance years at a time. When you see that big pop once in a while on earnings, that is actually the time to come in and start shorting that company. Always be mindful of not just the earnings, but far more importantly, the forward guidance. So guys, do me a favor, drop a thumbs up on this video. I really appreciate all the support you all give, and make sure to subscribe to the channel if you have not done so already. So the first company we're going to talk about, guys, is Rite Aid, ticker symbol RAD. Now here's the crazy thing. This company right here is a screaming example of just how close the threshold is between a good investment and a bad one. In 2014, I did use this stock to swing trade when it would dip, and I've actually taken some losses on this stock before, and it's just crazy how things have kind of evolved in the past couple of years, where at one point it seemed like all the coverage was very bullish on Rite Aid. Now obviously it's all very negative. They've had some big things happen over the past couple of weeks, and probably most significant is the reverse split they had. So back on the 10th of April, Rite Aid announced that the board has authorized a 1-to-20 reverse split of its common stock, and that actually took place on April 22nd. And I'm sure some of you on some of your watch lists seen Rite Aid stock pop up really high and probably come in your phone or your tablet or whatever you're using as maybe a 500 or 600% return, when in fact this was a reverse split. I had many people asking me about it that day. Didn't really have enough time to respond. I did caution everyone, please do not buy this stock, because guys, a reverse split is never a good thing. Okay, now a forward split, that is a very bullish thing. We've seen that back in 2014. Apple had a forward split when it was trading around $800, and then of course Netflix has done this too. Okay, Netflix had a 10-to-1 forward split a couple years ago. A reverse split is when a company has this many shares and they actually reduce it to gain liquidity in the share price. So usually the amount of shares they have are trading by such a small multiple that it's hard to have any kind of liquidity in the stock trading. And back on the 11th, they did have an earnings report. They beat on EPS by 2 cents and they missed on revenue by $180 million. But guys, that really was not the tale of the story, because forward guidance was awful. And like I said, the day before this is when they announced the reverse split. And like I just mentioned a minute ago, guys, it is sometimes not so much about the earnings report, but the forward guidance, okay? And of course, their full year revenue of 21.5 to 21.9 billion, up against the 22.2 billion consensus, does not seem like that big of a reduction. However, Rite Aid has been losing market share for years, and the continued forward guidance drops, seem to almost be endless. Now keep in mind, this is on a reverse split scale, but back here in 2014 and 2015, you can see Rite Aid still held its value pretty good. Of course, these share price values are not accurate anymore, but it was really here in early 2017 that Rite Aid seen a sharp decline, guys, and it has shown absolutely no signs of recovery. And of course, throwing in the reverse split, that is just going to make the bears even hungrier to short this company. Guys, I'm just here to tell you, be shopping those Rite Aid put options. You can put it off a few months, and as a matter of fact, they're very, very reasonably priced. I think this company continues to disappoint, and this could be a very reliable short sale. Now the second stock I want to talk about, guys, is Camping World, ticker symbol CWH. Now the reason I want to talk about this stock, guys, is because it is setting up, and I think it's almost a go-to short sale on this recent uptick. Like I said, over the past 3 months, anytime this stock has seen a jump or a movement up in the stock, it is quickly reversed and lost. And this company suffers from a slew of different issues. Like I said, being so fundamentally overvalued, also having a lack of any kind of bullish coverage, and of course just the common back and forth problem of having decelerating revenue growth. And keep in mind, this open lawsuit is still looming over Camping World, and really the top has not quite yet blown off the story, and I think there's plenty more details to come. But it did take a dip back on the 18th of April when Bloomberg reported that CEO Marcus Lemonis and a private equity investor were sued in Delaware for manipulating Camping World's share price when taking the company public in 2016. The full details of this lawsuit have not been released to the public yet, and I think as we get trickle down information about this pending lawsuit, I think it is going to continue to cut into the share price. Over 30% of all shareholders holding Camping World are holding the stock short, as you can see here. And guys, this percentage has been moving up higher and higher over the past couple of months. That is really what I look for when I'm shorting a stock. Which stocks keep increasing in the short percent of float, okay? For example, if I see a company with maybe 5 to 10% of the shareholders holding the stock short, and all of a sudden I see a sharp increase to 15 or 20%, you can almost pretty much anticipate that the stock is going to start naturally trading down because so many people are holding the stock short. A couple other things I look for confirmation when I'm looking to short a stock, guys, is how do analysts have it rated. As you can see, and just over the past couple of weeks, Camping World has taken some level of downgrade, and their earnings history is absolutely terrible. This earnings pattern has ticked up in Q2 of 2018 and then has been going downhill ever since. And if you look here historically, guys, they have 4 consecutive earnings miss. I think Camping World is going to be trading down to $10, and it's going to be under 10 in due time. And last on the list, guys, is Guess, ticker symbol GES. So this stock has seen a wide array of issues, and of course most of them are pretty typical things that you would expect: failure of earnings growth, dividend cut, and this stock has recently seen some artificial gains that I think quickly will be erased. Like I said, back here on the 22nd of April, Guess ran from roughly $16 and in 4 days was trading back over $19 per share. And guys, it was basically just on consumer growth. So Procter & Gamble had a strong read on consumer spending in the US, and investors were looking for value in the retail bin. So you've seen a 10% spike up in Kohl's, a 9% jump in Guess, and several of these poor retail stocks, are being expected to rebound, but guys, they still have to do it through earnings. Now Guess is set to report earnings on the 28th of May. I feel as though they will disappoint, but just keep in mind, this recent spike up in the stock price is purely artificial because there was no fundamental change to the stock. And in Q2 2018, they did meet expectations and had a beat in Q3, but have had 2 consecutive misses, guys, on significantly lowered guidance, and I think there is more pain to come from Guess. So again, I would just watch the pricing of this stock. I would not go all in on a short position, but I would feel very comfortable shorting Guess around $19 and just be aware of the ex-dividend date. Guys, if you would like for me to make a video about the effect shorting stocks on ex-dividend dates have, make sure to go down to the comments and mention that. But anyways, guys, that's all I got for the video. Thank you so much for watching. Like I said, drop a comment and tell me some stocks that you're thinking about going short on or buying put options in for the month of May. I would really like to hear some of your thoughts and ideas. Thank you as always for watching the video, and have a great day.